Let's talk about 4450. Mike, with Katie Stockton. She does technicals, Fairlead Strategies founder and managing partner and a CNBC contributor. We talked in the past about how technical analysis works, Katie, and it is trend following. So I don't expect you to know everything. And it also, I think there's times when it's probabilities. So when we were at 4,000 and we're trying to figure out whether we're going back to 4,200, we're looking at the 3,800, 4,200 trading range we were in. You thought we'd stay in that range, but it was the probability that you were talking about. What was the probability you saw at that time that we'd get to 4,450? It must have been less than 10%.
You know, when we got the breakout, that's what changed things. So if you recall, in mid-May, we had the breakout above that 4,155
4,155. But at 4,000, we had you certainly did not think that
we were working under the assumption that that range would hold.
Yes.
And of course, it did not. And really, like, your point's very good in that we're always just trying to put odds in our favor. Nobody knows what's going to, be the next month or the next year even.
Right.
But we're trying to make sure that we have momentum gauges on our side, relative strength on our side. We want to make sure there's no big overbought sell signals. So that's our charge. We want to make sure that we have those things supporting the market. And when we do, we're bullish. When we don't, we shift back to a bearish bias.
So what are you seeing at 4,450? What's left? Is anything left?
So the breakout did yield an objective of about 45.10. That's also aligned with the resistance level from the Fibonacci retracements. So that would be a natural place for a pullback to unfold more than what we've already seen. And yet, as long as the momentum is there, and as long as we don't have any big overbought sell signals, which we don't at this time, we want to stay with the bullish bias until it proves us otherwise, until we see that loss of momentum, because I think that this market is probably a very long-term trading range. If you look at the monthly gauges, you'll see that they tend to flatten out when you look forward a couple of years. So to me, within that context, we have to have an intermediate-term focus on momentum. And when we don't have that intermediate-term momentum benefiting the market, we want to be managing risk, of course.
Should we look at the NASDAQ differently than the S&P? It fell a lot more. It's rebounded a lot more, but it also fell a lot more. Is it the same? We're seeing basically the same thing if you just sort of average things out in terms of going down versus coming back. Is it the same phenomenon we're seeing, or is there something different, even stronger about
the momentum there is the same. They obviously maintain a very high correlation between the NASDAQ 100, the S&P 500. Okay. It has a better opportunity to go to new highs. It does have leadership still from the mega caps. We just saw Apple break out to new all-time highs. I don't know why nobody seems to be talking about that. That's a big deal. The more breakouts that we see from a bottom-up perspective, mega caps or aside, that's a bullish development because it tends to allow breadth to improve further. And breadth has improved, to Mike's point. We've seen the cumulative advanced decline line come through some resistance of its own, and that essentially confirms the breakouts that we've seen since mid-May and should foster a little bit of upside follow-through, add to the longevity of the trend.